Welcome to Bears in Exile. Today is December 15th, Thursday, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Not too much to say about today. It had some exciting points, it had some boring points, it was kind of all over the place. Here we are with the Dow ending with all kinds of interpretation here. Inverse hammer or fat body gravestone doji, or it's not at the top. It's not a shooting star, but nonetheless, kind of the same type of thing where it's falling down. Um, to me, it's kind of none of that. To me, it is a bullish long-term bar with the short-term moving averages coming in for a retest. That is what I see. And yeah, there's some things against it. There's the 200-day moving average. There's the middle Bollinger Band above it. It's below the major price consensus level. You have the majority of the indicators pointing down. But to me, at this point, I don't see full crossover and separation. There's not a lot of room between us and the bar. It's lining up with the midpoint of this big candle, which we said should be support. And if that were to fail, support at the bottom of it. So that's working out. But to me, this still looks just like a bar retest. Now, we don't know if the bar is going to fail or not, but certainly it's being caught here at the bar, which is completely normal, natural, and, we like to see happen. Uh, Beyond that, we still have the 14-day RSI moving average pointing up. That is of note. And yeah, if it takes enough damage, it will turn around eventually. But for the moment, it's still pointing up. You'll notice the fast stochastic is leveling out, suggesting that it could turn around and go back up. Now, it would take a day or two for it to complete that, I would assume. In that time, it's enough time for the slow stochastic to meet up with the 14-day RSI moving average, which is completely natural and normal behavior, for them to meet up, turn around, and then continue the move in tandem. So, if that's going to happen, that's going to play out really nice. And definitely, if that happens, would catch a lot of people unawares because the 14-day RSI only has half of the chart to go up before it's overbought. And that's just enough room for this to make a new high and then fall apart as everyone climbs on, oh, we've made a new high bandwagon. So I can see how this can put the hurt to a lot of people, which is what the market likes to do. And yeah, the market tries to put the hurt on me too, but the market hates everyone equally, essentially. But anyways, that's my feelings of it, and we do have a lot of indicators pointing down. I do think that we could be reaching the end of that and bouncing away from it, especially if this is it's going to turn out as an inverse hammer instead of a continuation with a interpretation of it like a shooting star, even though shooting stars are normally at the very top, but still same general idea there. SPX, more of the same. Is it a miniaturized gravestone doji? Should we take it as a shooting star? Should we take it as an inverse hammer? It's entirely interpretive. You'll notice that we do not have separation in the long-term moving averages the same way that we do on the Dow, meaning that this is much easier to break, and you can see that this is not nearly visibly as strong as the Dow. We already have the slow stochastic meeting up with the 14-day RSI moving average in the SPX, and everything looks pretty bad, although the regular RSI is still marching up. So yeah, it looks weak. It is holding here at the lower price consensus level for this month, and essentially the major price consensus for the previous month. If this section fails, the bulls are going to be in trouble, and the bears will have won this round. The key is, is that going to happen, or are we going into a double flat line, which seems very likely to me at this moment. Now we should have some support here at the bottom of this major candle right here, which is just below 1200. So if we do see a defense at 1200, maybe that'll be enough to hold, but if those price consensus levels break, I do expect trouble. But I'm also looking to see if these stochastics turn up, meet up with the 14-day. Actually, they have already met up with it, and complete its move. The VIX. Very, very interesting. Back below the 200-day moving average. Yeah, we have a nice green candle. The 14-day RSI moving average we've been pointing out this entire time is still pointing down. It is oversold, and the stochastics are trying to do something with themselves, but everything, for the most part, except with the exception of the histogram, is pointing down. I do think that once this turns up, the bears are going to have a field day, but as of yet, it is still pointing down. TNA. Oh, we have a hammer. Maybe it's at. Maybe it's enough to do something. We've been talking about this little loop-de-doop that we've been having here, and if it pops back up, which is fine because that'd be good for me, but if it pops back up, all that that's going to do is increase the likelihood of a double flatline, which we do not like. But all the indicators pointing down, with the exception of the RSI, with the exception of the 14-day RSI moving average, just like the Dow, just like the SPX, we want to see the stochastics turn around and finish out the move with the 14-day RSI. But that remains to be seen. The short-term moving averages, of course, do not look healthy. We do not have an uptick, and just not too much to say. Now for the fun part. UUP. We said last night, actually I'll go back 2 nights ago, we said we were outside the upper Bollinger Band, we needed to snap back in. That did not happen. We got instead we got a full body completely outside the upper Bollinger Band. We said it needed to snap back in. It did that today. Notice that we have something in between a spinning top and a hammer. We do not have a downtick as of yet. Oh, no downtick. We can see that we have excessive separation, meaning that there is a bubble, meaning that it does need to fix at some point. And we should be getting a downtick shortly. 14-day RSI moving average rolling over along with half of the stochastics, rolling over in the CCI, massively overbought, down on the RSI, up on the histogram, up on the MACD. This sucker is overstretched. This one has gone too far, and we can see that with the excessive separation. It's only a matter of time until we get that snap back. And then everyone's worried that Euro is going to, Greece is going to default this week, Greece is going to default next week, etc., etc. If they do, yeah, the indicators are not going to matter. But I guess it all comes down to, do you think that Greece is going to default this week or next week for a Merry Christmas bankruptcy? Can't really comment on that. I think the odds are against that happening, but you never know. So nobody knows. FXE said 2 days ago it was outside the lower Bollinger Band and needed to snap back in. It did not do that. Doji Star outside of the Bollinger Band completely. Said it needed to snap back in. It snapped back in today. We have a very small, shouldn't really call it a miniaturized hammer, but I'll call it a miniaturized hammer. Stochastics massively oversold. Uptick on the 14-day RSI moving average. If this is the turn, we should have our correction up. And the Euro has gone way too far down. Way too far. Breaking 1.3 was definitely overshooting the mark, in my opinion. And you can see the excessive separation in the short-term moving averages. All that we need is an uptick and then our corrective move. At that point, we'll be able to gauge whether or not we're going up for a complete bar retest or not. And so we should expect to move up, and that'll be good for the markets. That'll probably account for our entire Santa rally. And you can see most of the indicators trying to turn around, with the exception of the histogram and the MACD. Gold. Oof. Closing outside the lower Bollinger Band once again. This makes 3 in a row. Broken the 200-day moving average. We do have some excessive separation in the short-term moving averages. Of course, we have no uptick as of yet. 14-day RSI moving average still pointing down along with the stochastics, the histogram, and the MACD. CCI and RSI showing some buying at this level, but nowhere near enough to give us a positive enough result to get back inside the lower Bollinger Band. Very ugly, but yeah, it could get uglier before it gets better, but we will have an uptick at some point. We will have even more excessive separation, and then we will have our corrective move. SLV ending with a very small hammer. You can see the excessive separation in the short-term moving averages. We have no uptick. 14-day RSI moving average still pointing down. Still has plenty of room to move. No indication yet of leveling out. Stochastics very low. Some people buying with the CCI. Some people buying with the RSI. Down on the histogram, down on the MACD. Still ugly. And looking for a new recent low. I personally believe at this moment that should we get a new low, we will have our washout move. 14-day RSI moving average will be able to complete its journey down to the bottom, and then we will have a good opportunity, in my opinion. But it remains to be seen if that low will break and if we get a really strong washout move. If we could get down to 24 or something, that would be really cool. Not because I don't believe in silver, but because it'll be a great opportunity. And there you have it. Waiting for more news. The holiday season is just going berserk. Work is going berserk, so I apologize for the videos being so late, night after night. It's not because I don't want to do it or anything like that, but it is just scheduling. And once the holidays are over, everything is going to go back to normal. So please bear with us and continue watching. I have not missed a night, but like I said, sometimes they're very late. Very sorry about that. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.